we are seeing some quite aggressive move at the moment on dollar, and I have in my ear there has been some news that China has gone to Russia to ask about how to deal with sanctions because they're thinking about invading Taiwan. On that note, what else is going on in this crazy world? Well, Biden has apparently pardoned his son Hunter, so the world is complete. If you have any trade ideas, any directions you want me to discover or discuss, that'd be great. I just want to put out that I previously this morning did have a short on euro dollar at about 105, 105.30 or so. Can't remember exact price, but somewhere in that direction. I'll get back to it a bit later. So what happened to Nick? He's locked up in a closet in chains. Sorry. So, as discussed from many weeks ago, I said from about the beginning of election, we should be bullish on S&P 500. So the question I've asked earlier today in the midship group was, is this a buy area? Hans, oh, I am Nick. I'm called Dr. Nick. So, in that scenario, what's the reason for S&P 500 going higher? And the most important thing that I want to have as a theory is everything is okay in the market. Nothing is crazy. Nothing is doing too many crazy things. I just mentioned that a bit earlier. Everything is crazy. In the market, it actually isn't. And US manufacturing has just been posted, so let me go over there. Do apologize for being a bit late on that one. But, sorry, wait a minute. Why does one say it's in 30 minutes and then one says it is? Okay. US CPI is supposed to... How is that supposed to be? What's going on? So, I can show you what I'm seeing. At least this one says that the final PMI actual from S&P was 49.7 instead of 48.8. So that's a bit better than expected, and dollar strengthening. That's probably the reason. So, I don't know. What else are we waiting for? Don't know at the moment. So, everything is great. We are going back to 49.7 on manufacturing PMI. Everything is fantastic. Meaning, you are allowed to, in my book, or as I'm going to, looking for pullbacks on S&P 500 by next week or by the end of the week to go higher. We are in a month, meaning there's opportunity for a bit of a deeper pullbacks. Nothing too crazy, but that's my overall direction. And why is it so? Because Trump is going in to be the president. He's going to go lower taxes. He's going to go higher on the tariffs, which is supposed to boost the US economy, also make everything more expensive. It's, generally speaking, a good way for the S&P 500 and the stock market. So therefore, I'm still standing on my bullish stance. What I didn't mention, or what I didn't do, I didn't sell Australian dollar, US dollar. Even though we overall have a very nice bearish trend, we also have a bit of a pause at the moment. And we all know how I am in real ranges. It is not a great place to be. So I'll let you soon pass. The euro dollar, in my view for the end of 24 kind of view, is that we are going to go down to, is it 102 or so, probably? Is it 102? Well, I'm just checking the pivot points, but my theory is 102, and the pivot point says 105.50. Well, I'll give you that. So, in the theory, given that we're currently falling, we don't break below 103, your chance is again coming back up to 106 or 107.50 before going lower. So don't worry, because what I proved to the group last week was that oh no, did I remove it? Really? Okay, let's see if we can find it. It's probably far away. No? Okay. So what I did was last week in the mentorship group, I put some trades on euro dollar, and I said, what happens if we buy, what was it? Current price, first pullback, that one, that also got stopped, and then another lower pullback, which was about, see, that level there, and then one down here. Sorry, one down there. So the first two ones, the two aggressive ones, got stopped out. The second one, that was about 50 pips, 50% pullback or so. Sorry, that was 23.8. Sorry, my bad. 38.2 pullback was the winner chicken dinner, and then it was about target about 105.90 or so. So it looked like this. That's what I mean by what you guys are supposed to be doing out there. Yeah, the ISM manufacturing is out at 3 p.m. I don't know. I just saw them. I just saw my financial juice that it was already out. Basha, you're going to ask me every single day in December why I haven't dropped it on Discord. Because you have to hold me in my ears. And I apologize. I am a horrible version of Nick. I'm sorry. I will after this meeting. And December is going to be so great, Pasha. You're going to be so proud of me in January, okay? But every day I'm going to be accountable to you. I apologize. It's been a very messy lately. I apologize. But yeah, cool. So, do you think the Fed this time will hold rates? Actually, Simon, you are a fantastic person. I love you. Because that's where I want you to go. We have 16 days until FOMC. Mark is currently pricing in, well, a slight chance of a rate cut. Do I believe we're going to hold? I don't think we're going to hold. And the reason for it is quite simple. If EdgeFinder now works, great, and I go $2. And we have about 2.6 inflation. We are about target. Has Adam, I don't know what that means even. Can somebody send me a voice? If that's an annoying person, I feel honored. Ottoman says seasonality is euro dollar bullish. Yes, that is the problem. So I will come back to that. So for the strengthening of dollar, for the rate cuts to happen, this one should be below 3, and it is below 3. And we currently have interest rates about 4.45, which is about 2% above in current inflation, so they have to do something. So I think 4.25 to 4.50 is a better range to be at, because inflation is about 2% lower. So it needs to be, because if you understand, when inflation and interest rate is differencing, it's just my theory, by the way, it's differencing more than 2%. Central banks generally across the world react. So it's kind of like, it seems like behaviorally that's kind of a place where they start to move again. Now, if that's your theory, let's say euro dollar going to be is euro dollar bullish seasonality versus fundamentally euro dollar bearish. what do? Well, you're going to pick one theory, or you're not going to trade at all. I believe that we're going to do first 2 weeks lower, or whenever we hit 102, and then go bullish. So you might have both at the same time. It should be opposite, by the way. But with the current view, with the current world, I don't think that we are able to do those things. Do you have any points on gold from a fundamental point of view? I believe if you are in the VIP group in Discord, I had a long discussion about that. But yeah, cool. So I need to get going. I have 4 minutes. 4 minutes left. Come on, guys, go. Australian dollar falls without me. Euro dollar, I sold 105.30 or so. Need to check price later. Pound, same situation. Potentially. Pull back tomorrow. Then short. Should have sold that one. That was about half an hour ago. Okay. New Zealand, same situation. This is micro. This is also range. I don't like that. But it's kind of like when you fall and then you have a pullback. So then tomorrow morning or so, or London Open tomorrow, sorry, should be maybe another opportunity. Dollar CAD, I don't know what is going on here. Don't even tell me. Yen pairs are falling off the face of this earth. I have lost so much money here last month that I cannot even tell you. It's true. But it is not bullish. It probably is going to be, it's probably a fundamentally bearish, if you ask anybody else out there in the finance world, probably a bearish outlook on CAD yen, euro yen, and all those things. I just didn't see it coming. What seems to be the issue is JPY, or Japanese, are closing their bond purchases, meaning selling their dollar or selling their positions and buying yen. It seems to be an outside force, outside of the monetary, outside the risk, outside of that. It seems like, to me, it's what I would call a positioning move, a tactical move, more than anything else, in the preparation for Japan to increase their interest rates in about 2 weeks. What is your opinion on speculations on Trump aggressive impose of tariffs if we do expect Fed to change course? Yes, that's what the market is currently doing. The market is currently pricing in higher interest rate next year, lower pace of cuts, and aggressive new tariffs. So, am I expecting an intervention soon? Sean Gibson, you sounds like a very lovely person, and you're going to get one of my last questions, by the way. No, the reason why is if dollar yen would be about 160 or higher, then yes, we are very close to being intervening, because we were at 162 last time it happened. So as long as yen is strengthening as it currently is happening at the moment, they don't. But if yen was weakening rapidly and was doing that kind of trend, then it would be in a very serious, horrible situation. And yen would, because the thing is that for businesses Japan, which is trading somehow, or just even not even trading, just accepting the oil, they have to spend so much extra yens, which I think yen has had at that point fallen like 30% in a year. It's horrible for businesses, and it's so unpredictable because all of a sudden you can't travel, because one day it costs you, let's say, half of your salary or a month's salary, and tomorrow it's going to be 60%, and the other day is 70%. All of a sudden it's a whole month's salary just to travel. And that uncertainty just makes people, especially Japanese people, not able to travel and do normal business, because how can you even trust the exchange rate by tomorrow? So, gold fundamentals in my world is higher, because as long as we still have falling inflation, as well as we still have Trump, as well as we still have all the risk in the world. If China goes into Taiwan, as long as we have the wars, as long as we have falling inflation, as long as we have, what was the other one? As long as we still have lack of growth in general, and as long as we still have China lack of growth, and even as somebody mentioned, maybe BRICS using gold as their means of payment, my overall is bullish, gold bullish, but currently it's not a great technical place.
So I'm looking at a bit of hedging this week, just in case. It's an income play and a hedge play, sitting here at the 54th all-time high, the S&P, which just notched today. Just reviewing last week, we had limited trading. This was Monday, Tuesday, Wednesday, and Friday. There was no U.S. trading on Thursday because of the holiday. Friday was also limited hours, so prices were cut off by about 1 p.m. The first thing I also need to do is jump into my platform and add in a trade on JD. So let me switch up here, jump into the comments section. All right, thanks, Lee. I appreciate that. And good morning, traders. Nice to be with everybody. So there's the trade that I put in on ES. I sold a 60.50 call and bought the 60.55, did a 1-for-1. Right now, price is sitting, at my level. I was looking at a broken wing. Actually, you know what? Let me see if I can price this out a little bit differently. So is it worth doing a broken wing if I can go to this Friday? And actually, you know what? Let me go to Friday or Monday. Monday should be the 9th. If I put in a broken wing, that'd be a butterfly short call. Yes. And then I'd use a skip strike strategy. So if I were to, I know why it's backwards, because I want to go long call. There we go. Now I'm selling the middle. This should be a little bit better. There's my skip strike. This is way better. This is the trade that I wanted initially. Okay. So I take this trade for Monday next week. I'm risking about $1.37, hopefully $1.25. I get $2.50 credit. That's not bad. I risk $1.25 to make $2.50 credit, which isn't too shabby. So I've got more reward than risk offered up on this trade. And I also have a potential profit trap if I'm right. With the broken wing butterfly looks like this. So if I have price, let's say price stays right where it is. So this is going to be a little flag here for real price. So LP for live price, right? So if price goes up, it goes up a lot, I'm going to lose on this trade. If price stays where it is or goes down, I make my $2.50 credit. I also have a credit, profit trap, and then my risk. So I get paid on the trade. I have a profit trap on the trade. Price would have to go well above these highs to all-time highs for me to lose on the trade. Right? So there is risk, but if I can get this one for, I'm going to see if I can get $2.50 out of this trade as well. So $2.50 on this one. This will be for Monday of next week. Is that where I want it to be? 1 second. What's next Friday? The 12th? What news do we have coming out next week? We should have inflation news next week, if I'm not mistaken. This week we have PMI numbers out of the U.S. manufacturing, U.S. services. We have ADP non-farm. We have non-farm on Friday with CAD. We have OPEC meetings this week as well. Let's see. Let me go out to next week. Next week is when we have our core CPI, month over month, year over year. On Wednesday, we should have PPI on Thursday. Yep. So we have our inflation data coming out for the U.S. We have Swiss National Bank policy rate decision. That's not showing a forecast right now. Oh boy, we got a couple weeks of pretty big news here. All right. So I'm just considering that for if I go out to next Friday, put in this strategy here. Let's go long call fly, and I do a skip strike. That puts on a little bit more. That puts a bigger profit trap, which is kind of nice. That gives me like a 3-to-1. $2 credit, going 10 wide by 15. That's why. if I went 20 wide. Let's see. I'm going to mess around with these prices for a second. So I go 10 wide and then 20 wide. $300 risk. How much do I like this trade is the question I'm trying to answer. So that's 10 wide. That would be 15. That's 20. That's not bad. Let me see what I pull in credit. So I get $200 if I'm right. I'm risking 287 max if I'm dead wrong. I've got a profit trap. That would be if price stays exactly where it is for this week and next week. If we struggle to make these highs, I have that profit trap, but I'd be waiting for this one. There's no assignment risk on this. To the downside where I'm looking for price to go. This isn't a bad trade here. What is this? This is a broken wing butterfly strategy I'm looking at for a hedge on the S&P futures. So let me see if I can pull in. I'd want to get like 450 credit if possible. 450 credit. Yep. So I try to get 450 credit on this trade and let that just marinate for today. So I'm gonna put in this trade. So I'll give you the legs here in a moment. This will be part of the pulver alerts. I'll throw it in. This is going to be in the futures section of my pulver alerts. I'm going to try to get 450 on this trade. If I can't get it filled, the next price is 445. I'll kind of finesse this down a little bit. So let me see what this ends up offering me up as far as price and fill. So 450, not filling, 445. 440. I'm not taking less than 425. Actually, you know what? I'm going to leave it at 450 and just let it go good till canceled. So good till canceled. Okay, so I've got it pending at $1. Good till canceled for a 450 credit. Give me a little bit of wiggle room right there. All right, so I'm going to make that similar order. Ready to get this filled elsewhere. Similar order. Off we go. Just really quickly on the notion of, why do I think the Fed can disrupt the market for the month of December? And again, it may not. Statistically, let's just type up a couple things here. Statistically, you go back from 1928 to 2023, it's a lot of years, obviously. 74% of the time, December is a bullish month. Now, the definition of bullish means we just have to start and finish slightly higher. Doesn't have to be a huge month, doesn't have to be a big percentage gainer, just has to be, is it bullish? So if we open today and we close by the end of the month higher than we are today, that's fitting in this statistic here that 74% of the time the month is bullish. Okay, now December 18th is the FOMC end of year meeting. So just some big notables on the Fed. 62% probability the Fed cuts 25 basis points again. So we had 50 in September, we had 25 in November, and this would be another 25 for December. So if the probabilities remain high right now, 62%, they were as high as 80+%. They've dropped back down a little bit the last couple of weeks, but that would put the Fed in line for a 100 basis points of cuts since September. Right now, the market is only expecting 0.41% of cuts in 2025. Right? So that's likely maybe 1 to 2 cuts all year. Right? The Fed pause and the Fed pivot is potentially bad. Well, it's not necessarily bad, but it's potentially a change to market expectations. I think that's the best way to put it. Right? The market expected to see, more cuts next year, another 5, 6, 7 cuts at 25 basis points each, another, 1 to 1.5% of cuts. That's changed to maybe 25 to 50 basis points of cutting in 2025, right? So more than likely, December would be this. According to the Fed Watch tool right now, the market sees another 25 basis points of cuts by the Fed, and they do exactly what they say they're going to do. They go into 2025 and they pause. It's data dependent. We have a new president. We have a Republican House and Senate and president. We'll see if policy starts to shift. We've got a debt ceiling coming right out in January. All these things get hit pretty hard. We could have a bit of a first part of the year correction. We'll see. Anyway, all these things are speculative. But point is, based on the Fed, path of least resistance right now post-election is we melt up, and we keep melting up. Now, the S&P's notched 54 all-time highs. We're up like 26+% for the year. As an index, that's pretty darn good, So with the seasonality, I don't see a lot that disrupts this pace or this melt up, but I could see the Fed being potentially the coal in the Santa rally, because if the Fed is vocal about pausing, vocal about being more neutral, no reason to cut rates further, the market may not like that. So we'll see how it gets priced in, how it gets reacted to, right? All right. So just want to throw that out there just so we know what's going on for the month of December. Other than that, I think, more melt up is fine. More melt up is fine. More melt up is easy. If I'm wrong on some of my hedges, that's fine. This is easy money. This is where I don't want to be surprised to any type of, 2-3% move to the downside, 5+% move to the downside. We'll see, and the market can have some type of weird reaction by the end of the year. Who knows? But everyone's expecting, tax cuts and tax breaks going into 2025 onwards. There's going to be a lot of deregulation. Capitalistic mentality should be favorable, but I think the biggest threat is tariffs. If we're going to get crazy amounts of friction or add friction to the global economy, it's going to be inflationary. I've said this for the last couple of months now. Anybody that's been watching these live sessions with us, going into the 10-year yield, this is the one thing that needs to continue to have lower lows. If this goes lower, this is good for the U.S. economy. If this gets back up to the same levels or goes higher, this is bad. So down is good on the 10-year. Okay. Up is bad. Now this is on the 10-year yield, not the bonds. These are inversely related. Bonds have been in one of the largest drawdowns ever and one of the longest drawdowns ever. Does that mean that I want to get long on bonds? No. It just means that they've been performing like garbage. Granted, the yields are better now, but they're still performing like crap. So bonds, are at somewhat attractive levels. We had the 20+ year, at 82.67 is up to 93. This could be a pretty nice double bottom. If we came back down into this area here, my concern with the bond market is that we break before we stabilize. That the yields go up and something breaks in the yield market that then breaks the bond market. Then the bond market has like a good bullish run after something breaks. So I don't really want to be in the hook for something that has to break before I get into it. So I'm just going to hold off, but I'm just watching that 10-year yield very carefully. I think that's a big catalyst for where things go moving forward. This is not good. This is better. I don't know what's going to happen, right? Clearly the Fed cuts in the market, bond market, yields wise, ripped up, 70, 80 basis points. The average mortgage rate right now is 6.8% when it was down to 6.09 going into September. That's a big change, and that's the change in the wrong direction, right? So we'll see how that also factors into the end of the year. Price of currency slowdown. Yeah, I just call it the holiday drift. Basically, what's set in motion stays in motion. So if we're talking currencies right now, I get into the dollar index, we're at 107. Okay. There's an opportunity on this dollar index. I would say as a swing trade, I definitely wouldn't call the top on the dollar, you know? So, I mean, I look at this low, this low. I could see a potential topping pattern, okay? But in the event that we had this high, this pocket could still be tested. You know, we could have price making a run up towards these highs again and getting more indecision. You know, we had this big bear trap down here, this multi-month run on the dollar. If we have more choppiness before it kind of tops out, I'm not calling tops or bottoms on anything. Right now in December, why would the dollar top out here and then go lower? That would essentially be a top in December for the dollar. I could see January of next year making more sense as far as finding a top or a bottom. So I'm a little bit hesitant to say that I want to take a swing trade and short the dollar. Okay, what I am doing on some of my crosses with my pulver alerts on the currency pairs is I'm using open spaces, I'm using smaller trade sizes, and I'm giving the prices room to move. You know, I'm not trying to be super precise right now on pairs like Aussie dollar, New Zealand dollar, dollar CAD. I'm pretty open on a lot of those trades. You know, I've got several hundred pips I can work with.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.